Hey, everybody. Happy Thursday, bumpy day. We've been waiting 3 weeks for the crap to hit the fan, and it looks like today is the day. And a whole bunch of stuff is hitting at the same time, so we're going to cover a lot of that now. And hope everybody out there is okay. It has been a stressful day. And I've been sitting on a lot of cash and waiting for the market to tank. And it's just the stuff that's happening towards the end of close day was even caused me a little bit of stress. And I consider myself completely free of emotion. So hang tight, everybody. We'll try uncover and unravel as much as we can during this very quick session. Big thank you to everybody in the chat and the moderators out there live. So math, money, and freedom. And now this is investment advice. So first of all, let's compare Bitcoin halving cycles. A quick check-in from Econometrics as to where we are today, just to put everything in perspective. So here you can see from this chart, there's a couple of different lines. One is the yellow line, that is the 0 ETH halving, the very first one, so it's not really relevant. And then we have the two other halvings. They are represented by the pink line, which is the first halving, and the dark brown line, the second halving. And the little orange one in the middle is where we are, the third halving. Now, we are about a quarter of days, we are exactly a quarter of days into this cycle between kind of now and the next halving, and people are seriously wondering about diminishing returns. And it's a very fair question. It is not the Bitcoin of the old cycles. And my opinion is that we haven't seen the peak of the cycle yet, and the same with Nick from Econometrics, because adoption is exploding and it cannot be denied. No matter what happens, it's crazy. So, we're not going to get the 100x or 1000x from the past. We'll definitely get more than a 3x of where we are right now. So that's just a quick check-in, and we have an exciting video tomorrow that talks more about this and everything else. So a little bit of bad news regarding the spot ETF. I kind of had one prediction that June 2022 would be the time for the Bitcoin spot ETF in the US to be approved. Well, the rest of the world has ETPs and ETFs all over the place, but my prediction may be iced. This is an interesting back and forth between the Minnesota representative, a guy called Tom Emmer, and he took to Twitter to share a letter from Gary Gensler. And the letter explained the rationale behind the agency's unwillingness, very short, to approve a spot ETF. The letter made it clear that the agency was, far away, not sure how far, from approving a Bitcoin ETF product. But they did say they are giving it careful consideration for future approval. So we'll see, but it looks like it may not be as close as we imagined. So hang tight for that. We were hoping for that to trigger a huge summer rally, and it may still happen, but you know what? There's so many other rails to jump onto the Bitcoin ETF train. So let's go. So Bitcoin, this is a cool piece actually from Watcher Guru. Just in, for the first time, the number of US citizens holding crypto, 24%, has surpassed the number of citizens holding a traditional money market savings account. That is big. That is big. It's funny because all last year I referred to Bitcoin as my money market account because you don't really want to hold on to fiat because it's debasing at 15% plus a year. You're losing that much purchasing power. But here, despite that, people are catching on. Again, we're still very early in this game, but that is a huge piece of news. That data was from Morning Consult, by the way. Now, this is some regulatory news that has rattled the markets. A couple of things rattled the markets today. I'll cover them all and try to dispel any fear as well, if I can. So first of all, the USFSOC, it sounds like a UFO. This is the United States Financial Stability Oversight Council. They identified stablecoins and cryptos as threats to the financial system. Woohoo, we kind of knew this was coming, but it's kind of interesting. Threats. What do they mean by threats, especially stablecoins? Because the big focus of this paper was stablecoins. And could they impair the Federal Reserve status of the US dollar in the world today? But the same day that this happens too. USDC Circle, SPAC, doubled in value to $9 billion from $4.5 billion. And that is insane. And USDC coin, which is the second biggest stable coin out there, again, they are going the SPAC route to raise some money. And that is a big doubling. So my theory is there's no way investors and the people behind the SPAC would double the value if they knew the US government was going to ban stablecoins. So I think it could just be a little bit of irrational fear right now. Just my theory. Don't take that to the bank. Now, the other piece of news that rattled the markets is the FBI is setting up a crypto unit. So if that's not a warning sign to take self-custody of your crypto, I don't know what is. Leave a little bit on the exchanges, but if you have a big chunk, you may want to think about storing it. And boy, have I changed my tune, because a year ago I thought, crypto's safe on the exchanges. Today, there's a number of reasons why I think that's not the case. Now, Bloomberg reported this on Wednesday, and there's also a little bit of a rift between the White House and the Treasury and FBI and everything else. But the point of all of this is really to set up a unit to help prevent things like extortion and find ways to chase down money. Now, the administration is engaged in a big effort to regulate the sector, and the FBI forming this new unit led by a seasoned computer crimes prosecutor, her name is Yoon Young Choi, is actually a positive, because that will help reduce the amount of fraud and other types of shenanigans that are happening out there in the marketplace. So again, this does not concern me. It's not like the FBI are going to try and confiscate your crypto like they're doing in Canada. The uproar here would be out of control. The Canadians, I think, are just far too polite for that. But let's not get too political here, because that's not liked. Now we're going to switch gears and talk about miners for a second. This was an interesting piece from the Block Crypto. Big thank you to Sanjay for bringing it to my attention and asking for the report. So as we see the exahash rate in 2022 exploding, I'll talk about that in a minute too, it could easily hit 325 exahash at this current growth rate. Now, I know there's a couple of miners in the audience, but this is an interesting statistic to show you the difference between the different types of hardware you can use and your break-even point for Bitcoin. So first of all, I have two gray arrows on the left that I added, and they're pointing at the 3 cents a kilowatt. I think if you are a miner, you should definitely be in a place where your electricity is less than 5 cents a kilowatt, because you're competing against, wind energy and hydroelectric power, etc. So you got to have cheap electricity out of the gate. And the second thing is look at your hardware. So if you look at the Antminer S19 Pro, at 3 cents a kilowatt hour, your break even at 325 exahashes, is a Bitcoin price of 7,600. Everything excess of that is pure profit, pure gravy. If you have an old Antminer S9, your break even is $26,000 at that same 325 exahashes. If it's at the current exahash rate about 200,000, your break even 16,000. And with the Antminer S19, it's about 4,700. So just if you're considering getting a miner, there's some interesting things. Try get the more modern equipment. And that's the interesting thing about Intel as well, and how their new chips are completely sold out already. So let's look at the hash rate today. This is the 7-day average. It's exploded. It's way above 200. It's 215. How things change. So we'll see what's going to happen. A lot of consternation when I said price typically historically follows the hash rate. Some people think it's the other way around. I'm not going to get involved in that. But the point is the system and the chain is getting more and more secure by the day. And that's what the hash rate does. So let's talk about development activity. I did a video a month or two ago about follow the devs, follow the money. This is the latest report from Santiment, which I thought was pretty cool. Now, the Daily Hodl actually shared this document, and the report is from Santiment that I subscribe to, and it's a top crypto analytics firm. And it says the smart contract platform Solana, Cardano, Polkadot are showing strength in this particular development metric, i.e. the amount of development activity on the chain. Santiment says that the 3 Ethereum competitors lead large cap crypto projects in terms of GitHub submission rates. Now, development activity continues to play a vital role, as we've always said, in the development of major cryptocurrencies and their ability to thrive. The more development, the more activity, the more lively the chain, the more features, the more functionality, the more dApps, etc. So it's a critical metric to look at, and glad to see Santiment doing this. Now, Solana is the top project. Not chilling, just pointing out a fact. And Cardano ranks second. So very positive to see that exploding up the charts. You can see, though, Solana is far and away bigger, but they have, near close on 700 dApps now running on the chain. So extreme amount of development is happening. Third is Polkadot. Nice to see them coming alive too. Ethereum being very low, about to be surpassed, if you look carefully, by Chainlink coming up from the rear. So think of this, as an indicator. Follow the devs, follow the activity. That should be a very positive sign for success of a chain going forward, unless, of course, the chain is fundamentally flawed or broken. So you always have to take that into account when you're making your investment decisions. So let's talk a little bit about Charlie Munger. And first of all, give him credit. He's 98 years of age. He's awesome. And I would love to do this type of stuff, even at between my age now and where he is now, halfway, would be a big pleasure. But he talked about Bitcoin, gold, and fiat on a conference live, and he said some interesting things. He did say fiat is going to zero, which is very positive. We agree. Good one, Charlie. He also said civilized people don't buy gold. I thought, well, 2 for 2 ain't bad. And he said Bitcoin is a venereal disease. So I've never had a venereal disease. I don't know what it's like, but maybe he has more experience than me in many different areas. But they're very colorful words. I thought that was funny. And I agree with 2 of the 3. So fiat is going to zero. He said fiat is going to zero in the next 100 years. It's probably happening a lot sooner than that. And again, good man, Charlie, you're wrong about Bitcoin, but you're right. 2 out of 3 ain't bad, as they say in the old days. Now, Bank of America, back again with some more news. Bank of America believes Chainlink is the likely driver behind growing TVL and DeFi developments out there. DeFi is decentralized finance, and they spoke about $205 billion in locked DeFi, up over 300% from a year ago. And they tucked into the fact that DeFi is dependent on smart contract systems, and smart contract systems need oracles like Chainlink, and they were extremely bullish on both Chainlink and the fact that it is the underpinning of all of DeFi. So watch this space. Super exciting to hear from Bank of America again. They're getting more and more bullish. And if anybody has any doubt about Ethereum, like I do, this should give you some confidence that they have so many different layer 2 band-aids running right now. So this doesn't even include, this is the top 20 list, excluding Matic, which has about 5 billion in TVL. But if you're in any doubt with the amount of activity for layer 2 scaling solutions on the Ethereum blockchain, it's insane. Top 3, Arbitrum, DYDX, and Metis are just doing well. And then you got Optimism, Loopring. Optimism, I think, had some bad news last week. But again, a massive amount of activity. And we'll be digging more into ZK rollups and Optimism, etc., as we go down the line. So watch this space carefully. These layer 2s could really save the day for Ethereum as we go forward. So let's talk about the market and options expiration. I normally touch on options for crypto, but this got my attention. This was from Bloomberg. Excuse me, slight cough. A massive 2.2 trillion of options expire this Friday. $2.2 trillion, ladies and gentlemen. $45 billion is for single stocks. I personally don't have anything expiring this Friday, but I did in January. Anyway, it's a very tenuous time when you look at this sheer amount of volume, and all the options market is pretty focused on short-dated expirations. Everybody's thinking short-term. Everybody's rattled about what's going on in the geopolitical scene, and with the Fed potential hiking in March or even earlier. Huge amount of volatility. So wear your seatbelts, everybody. Buckley time. I expect a lot of massive movements in the markets up to Friday. And it's created a bit of a herding effect out there. You can see the amount of money all trying to get through a very small door this Friday. So again, be careful. Now, historically, they're normally more bullish contracts, but now the choice among some of the meme crowd investors, etc., has had more of a demand for bearish options, more put buying as well, particularly with the backdrop of where we are. So again, buckle in. If you're short, good job. If you're long, expect some volatility, maybe get stopped out of some things, and we'll see. But expect a lot of activity this week, and it began today, as we saw in the market. Now, Cathie Wood was in an interview as well, and she was questioned about her disruptive stocks and her choices for all of her portfolio. I'm a big Cathie Wood fan. We don't agree on a couple of things. Sometimes she sells something when I buy it. Sometimes she says the world is deflationary. I say it's inflationary. But apart from that, I do agree very much with a lot of her choices. Now, in this interview, Cathie Wood reaffirmed that innovation stocks are not in a bubble. Absolutely, and they stand by that. I think it was a CNBC interview. And she was asked around some of the names like Teladoc Health, Robinhood, Roblox, Pacific Biosciences of California. They're all off huge percentages, 76%, 85%, 60%, 78%. And she was asked, will they come back? And she said, absolutely, they will come back and go beyond where they were, their all-time highs. So extremely bullish, but again, it's a long game, and this is the importance of time series investing. She's in the right place, she's in the right stocks, but maybe got in a little too early or bought at the wrong price. So hang tight, everybody. That's from Cathie, not from me. Now let's talk a bit about Ukraine and the Ukraine news. Ukraine is the fifth, well, it says here, is the latest country to legalize Bitcoin as cryptocurrency goes slowly global. I wouldn't say slowly, it's very quickly. Ukraine is the fifth country in as many weeks to lay down ground rules for cryptocurrency. That is massive. The new law will help bring what they believe crypto out of the shadows, and crypto exchanges will be able to operate legally and be protected. And now, as I think Pompliano said, Ukraine just legalized Bitcoin. Eventually, every country will. It's inevitable. But the real key thing here that gets me excited is why so fast, all of a sudden, with who knocking on the door. So I don't know if it's a way of getting funding, managing money, controlling risk in the time of, perhaps war as we go forward. So we'll watch this carefully. But again, it's a good thing for the whole space. Now, this was a little bit shocking. Seeking to avert attack, the US is trying their best, focusing on diplomacy. I think the meeting last week, I think Putin was playing rope-a-dope with Joe Biden. We don't know exactly. But this little headline caught me by surprise, and it gave me deep concern. If war with Russia comes, Ukrainian women will be on the front lines. And that's very concerning. Nobody should be on the front lines in this day and age. They should be playing with drones and stuff, or playing chess behind closed doors. I don't even know why there's war today. It's ridiculous. But anyway, fingers crossed, it doesn't happen. Now, this was a piece in The Economist. Whether he invades or not, or backs down, Putin has harmed Russia. And this was very, very interesting. So it talks about how he has damaged the reputation of the country, damaged his global standing, etc., etc. And the question is, what is he going to do next? I don't know. He says it's just a military exercise. He says he's withdrawn some of the troops. We'll see. But it has rattled the market, and it rattled the markets most today. And that's why we're mentioning this in the news. We'll monitor this very carefully, and hopefully he'll stand down and take more troops away from the Ukrainian border. Now, in a final piece of news today, mortgage rates skyrocketing. I did mention to you all, hey, try refi if you can, late December 2021 and early 2022. But when you look at this chart of how the 15-year and the 30-year are skyrocketing, and it's not just in the US, it's all over the world, but that is a massive move from 3% to 4%, and especially the 15-year was about 2.25, 2.3%, up to nearly 3.5%. That's only in a couple of weeks. Last week, according to, I think it was Bankrate, the rates were 3.75% a week ago. Now it's 4.03% again. The banks jacked their rates ahead of an announcement from the Fed. So I hope many of you got your refis in. If not, hang on. But what it will do, though, for those looking to buy, it'll put a lid on the hot real estate market, and it should bring prices down. So that might give some first-time home buyers or new home buyers an opportunity to get some real estate cheaper than it would have been a month ago. So that's the real estate news. Kind of a big mix today, covering a lot of ground. I hope you like the content, and subscribe if you do. Big thank you for being here. And we've got two things tomorrow. We've got DCA and a very special video that we're supposed to launch today, but there was simply too much news to cover, so I had to do news. So thank you all for being here, and I will see you all tomorrow. DCA 12 noon Pacific, around 21 hours from now, with Rob and Ben. Thanks, gang. Bye.